Good morning, everyone. We're going to start our webinar. Welcome to our small business webinar on access to capital. My name is Hurik and I work for the City of Glendale for the Economic Development Division. And as part of my core responsibilities, I help ensure that our small business community is connected with up-to-date information and resources in order to help them succeed. I'd like to thank the Pacific Asian Consortium and Employment Center and California Office of the Small Business Advocate for partnering with us for this webinar. With that said, I'd like to turn it over to Vartuli Andreasen from PACE to kick off our webinar.
Good morning. Thank you, Hurik. Good morning, everyone. My name is, as Hurik mentioned, is Vartuli Andreasen, and I'm a business counseling manager at PACE Business Development Center. I would like to take this opportunity to first thank the City of Glendale for providing this opportunity for us and all the panelists to do this presentation. And I would like to also thank you all for participating in this workshop. Before we start today's workshop, I want to briefly talk about who we are and what we do at PACE. The name PACE stands for Pacific Asian Consortium in Employment, and we are a nonprofit organization. As it comes with its name, PACE was originally formed to serve Los Angeles' growing Pacific Asian Islander refugee community in 1976. Over time, we have expanded our services to address the issues of poverty and inequality faced by Angelinos across all ethnic and minority groups. PACE services now include early childhood education programs, employment services, energy saving programs, business development center, and many more. Since 1976, PACE's Worksource Center has offered job seekers and employers integrated and comprehensive services, including counseling, training, and placement by partnering with community-based organizations, government agencies, colleges, schools, unions, and employers of all the sizes. PACE's Worksource Center provides employment and training services to job seekers at no cost. At PACE Education's Head Start and Early Head Start program, we serve low-income children from birth to 5 years old and their families, and these services are free. The program offers early childhood education and social services that help children get ready for success in school. And we have PACE Energy Department that's in collaboration with its community partners, provide outreach, energy and environmental conservation, education, weatherization programs and services, and they assist with utility bill payments to low-income individuals and families throughout the greater Los Angeles area, and Glendale, of course, the zip codes in Glendale are included and in that area. And finally, PACE Business Development Center, the department that I work for, has educational and financial programs available to help small businesses, regardless of who you are. As far as you are a small business, we are there to help you. Since 1993, business development team have provided entrepreneur trainings, technical assistance, one-on-one counseling, and access to capital to thousands of small businesses. Our staff at PACE can help to start up your business, register your DBA, get your business tax registration, and have your seller's permits. We also provide help to set your sidewalk vending and much more. There are a lot of factors that go into business owning. A business counselor can help you to identify what those factors are, explain their importance, and help you to learn how to manage them independently. Our staff can review your drafted business plan and financial projections and work with you to bring it up to the optimum level. We can also provide credit counseling services and help you to make a plan for achieving your business, credit, and financial goals. At PACE Business Development Center, we offer many government contracting and procurement opportunities with many different public agencies, from business consulting to getting certified to bidding on contracts. We are there to help you every step of the way. Many of the clients who we serve are socially and economically disadvantaged and need guidance through all these processes, specifically on the procurement process. We also understand that owning a small business can be an extremely gratifying experience, yet the financial aspects of owning a small business can at times become extremely challenging. Many small businesses are lacking the capital needed to help their business to grow. We at PACE are there to help you to go through the lending process, get your documents ready, and help you to access the capital that is needed to ease your financial stress. PACE Business Center also houses an award-winning SBA Women's Business Center and operates 2 of 10 business source centers within the city of Los Angeles. And we are an SBA lender, EDA lender, an iBank lender, and a certified CDFI. We welcome at PACE, we welcome everyone with any background. Please feel free to visit our website and connect with us. And coming back to today's workshop, I would like you to know that in the first hour, my colleague Jennifer will go through the lending process and requirements. And in the second half, we will have our 3 valued partners and panelists to share the information and programs their institutions have for small businesses. And finally, we will have a Q&A session to answer all the questions. So I encourage you to write your questions through the workshop in Q&A box, and we will address them all. Without any further ado, I pass it to Jennifer to start today's workshop. Thank you all once again. Thank you.
Thank you, Fatuhi. And I'd like to thank everybody who participated the workshops this morning, because there's such a beautiful day out there. There's so many things you can do, but you choose to stay here. And I hope that our presentations and our all the panelists will provide something really useful to help your business growth. So American, right? We build on the foundations of entrepreneurship. This is why we're here, because there is a lot of opportunities we can pursue freely, and maybe in other areas that we, countries or locations we might not be able to do. So to start a business is all the typical American dream. So how do you start your business and how do you fund your business? So I hope that I will touch base on the high level of introductions and give you some ideas of what to do. So let's use a more like an example, right? So for example, if you have an idea, so like Joe, right? Joe has been working for ABC Plumbing and Heating Services for over 5 years. So he was thinking, now I believe I have the skills. I look like my boss makes a lot of money because they send us out, they send 3 of us, the plumber out. And then when we look at the invoice, he charged the clients maybe $150 per hour. But my owner only pays me, the business owner pays me about $80 an hour. Wow, if I start my business, I can charge a client $150. So comparing to I got paid for $80, my pay will increase to $150. That's $70 extra per hour I can earn. Let me start my business. So that's a lot of the time as a business owner, this is where the entrepreneurship comes in, and they want to start a business, right? So at this point, Joe has the skills need to do to run a AC and heating business. And in the past 5 years, he has been trying to support his family, but he tried to put a little bit of money away, because this is his dream to start a business. So what should Joe do at this point? So of course, he can start a business and he needs to apply for a license. He needs to apply for DBA, and then he needs to open a bank account and then to receive the money from the clients. And then we have lots of banking partners here, and then they can give you a little bit more comparisons for where to go and as a startup, right, or a small business. Because we know that some big banks, they have different kinds of programs, but they not be the most friendly for small business. So Joe should open a business account, and then he also have lots of things you need to think about which one to go, right? Everything's always devils in the details. So now Joe already, maybe with the help of Pace's business counseling team, he obtained, he registered a company, or he just get a DBA for Trisha's name. And he already, he just finished opening the bank account with another business. So now he's looking at his own financial situations. Oh, he didn't think of that. Okay, when you work for somebody, you drive the company truck, and you use the tools to provide by the company. Now he's operating his business. He need to get all those ready. So does he have enough money to purchase all this equipment? And does he have enough money to pay for his personal bills in the coming 3 months? Because he's not a W-2 salary earner anymore. He has to rely on any business revenue or any clients pays him in the coming 3 months. What if, because his company is a new company, some of his clients may trust him and give him some work, but he might not be able to do like every day, like billable hours. We call that he might not be able to earn the, to make money every 7 hours every day, 5 days a week. So under that kind of situations, does Joe has enough money to pay for his own family expenses in the coming 3 years? And if the answers for number 1 and 2 is not sufficient, then what other ways he can find to fund the business? So this is how equity financing or debt financing is coming into play. So this is why we have this discussions of access to capital as a small business owner. So what are the ways Joe, use this example that he can fund his business? Of course, he would have to start with a little bit of his own fund. We call it bootstrapping. And we mentioned he had been saving it due diligently in the last 5 years. So he should have a little bit of money to maybe even buy put down the down payment to buy a truck. And so now he can drive a utility, a truck instead of his regular commute sedan and to go to the job sites, and his trucks can put some, there is some equipment put on the truck. So he might be able to have some personal savings, or the company he used to work for has a 401k for them or retirement plan for them. And then he can maybe draw some of those to pay for the down payment for the truck. And those for sure is the owner's fund. The owner has to come up with some of his funds, either from savings, retirement accounts, or personal credit cards to buy some tools from Home Depot first, because even you use personal credit card to buy for equipment, you still can put it as a business expense, and you might be able to pay it next month because of the billing cycle is not here yet. But during this 25 days, Joe already generate incomes to pay for the to make them credit card payments down the road in 25 days, right? So this is how Joe comes up with some of the money from his owner's fund. We call it bootstrapping. We're really strapping to get started. And are these good ideas to use a retirement account fund or personal credit card to fund the business? It depends. If he can predict it, he knows there's money come in, his business clients already lined up, then it might be a good idea. But if he just dive in the business without thinking, oh, I feel like I should be able to get clients, but he doesn't have a good way to plan for it yet, this might not be a good idea to use some the retirement fund. Maybe Joe's wife will be not happy because he's trying to pull out the retirement fund to fund his business. But these are the ways to do it. And everything, we always have to look at pros and cons, which part to use. But in addition to Joe's own fund from the personal savings or retirement accounts or personal credit cards, of course, this is where other type of financing comes in. A very typical one is equity financing, and the next one will be debt financing. So what's the difference between equity financing and debt financing? Equity financing basically is that you have an investor. Investor maybe like we'll just go back to the example. Maybe Joe's brother-in-law said, "Hey Joe, I highly recommend you do this. I know that you can do it, and I know that you have been developed lots of good clients and relationships, and client really trust you. So you should go for it." And Joe's brother-in-law Paul said, "I will invest, give you invest maybe $10,000 in your business, so you can buy the buy the truck, you have a good truck that instead of a used truck that you can buy a new truck. So you feel more comfortable on the road and you carry a better image when you meet the customer. So when Paul make the investment into Joe's company, and then this is a equity financing. But Paul wants to have a portion of the business. So say, hey, Joe, I invest $10,000 in your business. I want 10% of your company because I want to be owner too. You don't need to pay money back to me now, but when your business grow better and have positive cash flows, I want to have some dividends. But when the business is not making money, I won't ask you to give me any money back. So that is what an equity investor is about. They put money into the business. They don't ask for a certain fixed payments every month, no matter business makes money or not, like a debt financing type of situations. So this is an equity financing. That's a big difference. But the equity investor, they want a share in your company. They want the portion of the business. When the business is successful, that's how they get their money back in the future. So there's several ways out there to look for investors, depending on what industry are you at. If you are, especially if you're in a tech industry, and or if you develop an app, and those a lot of the time that a lot of the or you are focused on food distribution or restaurants. So there's different type of angels investors out there. They look for different types of investment they want to put their money in, because they want to let the money generate returns for them. So you just have to go out there to look for it. But when a business is started at the early stage, then typically you're looking for angel investors or venture capitalists or to invest in it. When the business grows bigger, and sometimes like what Vatuhi mentioned, Pace is working with some other larger type of company. For example, some of them, they have the revenue size of about 20 millions, and they were looking for investments. At that time, you would more look for strategic partners. Does that have any other company in the industry that will share the vision with you? And when they merge with you, they can have put investment in your company. They will have some synergy, and those are the more on the larger scales. So those, but if you are getting started, and usually from the equity investors, you will be looking at families or friends and who believe in your business, who shares your visions, or some other type of angel investors out there. So that's the equity financing. Pace and all the panelists today on this webinar, and we are all lenders. What do lenders do is we provide debt financing. Debt financing means that you borrow money and then you have to pay over a period of time with interest. For the pros for debt financing is that you don't give up any ownership of your company. You still own your company 100%. You have the ownership of it. But the drawback is that no matter your business makes money or not, lender will require you to make a fixed payments every month, or sometimes interest payment only without principals, but then the principal pay at the back end. But at least every month that you have to make payments, no matter your business profitable or not. So this is the major difference between debt financing and equity financing. Equity financing, the investor does not require you to make payments to the investors or dividends or in forms of dividends or distributions every month. They want to have a chunk of your business, either large or small, depending on their investment. Debt financing, that as a lender, we want to see cash flow every month. We want you to make payments every month, no matter the business profitable or not. So that will create somewhat, in some way, you can call it a burden of the monthly payment, because you need to make sure that you have the money to pay for it, no matter your business generate profit or not. And also for debt financing, lenders for small business, all the lenders will require personal guarantee. What's personal guarantee, you may ask? So personal guarantee, which means that when your business is not generating the cash flow needed to make the loan repayments, you, the borrower, as a business owner, is personally guaranteeing the loan. You have the obligations to make the payment. Then you may ask, wow, people tell me that I should start my entity as either LLC or S Corp, and so I can separate my personal finance and my personal assets and liabilities to the business liabilities and business assets. What are you telling me? And why would I need to do that? The personal guarantee, the loan, and I don't want to do that. I don't want to link my personal assets and my personal liabilities to the business one. Yes, when you set up an entity, because part of the reason is to separate your personal side with the business. However, as a lender and a lot of the business, before you really build a certain size of your business, and then you build up your business credit scores to a certain level, then all lenders will heavily rely on you as the owner, your credit score, and how you committed to the business. So when a big company, just pull out an example like Google, I don't think they need financing, but if they go to look for debt financing to the lender, ask them to loan some money to Google, or now they call it Mega. So do Zuckerberg needs to personally guarantee the loan? No, at that time, he doesn't need to do that because it's already a public traded company. They already built up lots of the business credit history. But most of our clients we work with are small business owner, which means they make the revenues below 20 millions and whatnot. And at this point, when you go to borrow from any financial institutions, we always require you to have personal guarantee of the loan. By signing this personal guarantee, then you are linking your personal assets and to the business assets as well as the business liability. So this is one of the you may say is a drawback for debt financing, because you are linking your personal assets and liabilities to the company. Now you're bundled together. But look at the upside. You're not giving up any ownership of your company. You are still the owner of your company. You can operate the company the way you want, but sometimes lender may put some restrictions. They want to review your financials periodically to make sure you don't do anything out of the bound. But basically, you still own your company, and you can operate. You can market your company the way that you want, and then you can implement ideas how to make sales and implement the sales price and determine all of that. But if you have equity investors in your company, someone owns certain portion of the shares of your company, they might have the say in your business. Go back to the examples we just talked about, like Joe and Paul. The brother-in-law Paul invests 30%, into the company, and he owns 30% of the ownership of the company. He thinks Joe is charging $150 per hour is too cheap, because Paul said, I had a plumber come out to my house the other day and he left like in 30 minutes, but he charged me $200. Joe, you should charge $200. I believe that's the market rent, the market price. But then Joe thinks that, no, because Paul, you live in LA area, so you can charge for $200 per hour, that kind of rate. But I live in a city of who our name like Hammett, right? It's less, not so close to LA. The clients here, they cannot, they will think $200 too expensive. So I have to charge $150 based on the market condition. So at this point, Paul and Joe may have some kind of disagreement. So because both of them are owners of the company, so that's the drawback for equity financing. Even though Joe doesn't need to make any payments every month until the business is profitable, but he might run into this type of operational discussions that have a different directions that he need to deal with the investors. So those are the major pros and cons or difference between the debt financing and equity financing. So what's the deal if you decided a business owner like Joe wants to move forward to know, I want to do more debt financing. I don't want to deal with my brother-in-law and always ask me thinking he knows better, and then but he's not in the industry. I don't want to deal with him. I'd rather go to use just debt financing or borrow money, and I want to remain 100% control of my company. So what can Joe do? He can apply for a business credit card, and then he can apply for loan. The loans is different type of loans, secure and secure, and that's why today we have different panelists in on our discussions later. And then there's traditional lenders like the banks and the enterprise banks, and then we also have Comerica and Cathay banks here, and we also have PACE. PACE is a CDFI, just like Vatuhi mentioned. CDFI stands for Community Development Financial Institutions. Basically, in a nutshell, we do the loans that maybe the banks won't do. For I think later on the bankers can maybe comment on that. Like PACE will do loans as low as $5,000, that kind of working capital loan. I think most of the banks may not have the that type of appetite to do that kind of loan because they're focused on other products, or they might do it, but they require other banking relationships. But PACE is a CDFI. There's other CDFIs out there. CDFIs only do working capital loans with them. We don't have credit cards. We don't have other type of financing or other type of banking service products. So those are things out there. And then I think later on during the discussions, welcome questions, and we might give you ideas for which one would be the better fit for your business. And those are the banks and the CDFIs we do loans. And there's also online lenders. And some of them, just for example, something called On Deck or Blue Vine, and those are online lenders. The underwriting process is very easy, but there's always a catch, right? If the underwriting is easy, which means that they require they do less due diligence, they expect the default rate is a little bit higher, and that's why they charge a lot higher fee and as well as interest. So those are the online lenders. And there's some, and also the case we just meant, the examples we just mentioned, that Joe, instead of he can counter to his brother-in-law Paul, said, I don't want you to be an equity investor. I don't want to share my company as interest with you. I don't want to have two owners in the company. But you can loan me the money. I can make loan payments to you every month. So those are private lenders. That works too. And those are basically we just talk about loan. And other type of debt financing is line of credit. A lot of the small business owner always ask, what's the difference between a loan and a line of credit? A loan basically is a fixed, you take out a loan that you get the lump sum disbursement in the beginning. Once you get the loan from a lender, you have a certain period of time that you need to pay, and usually the payment will be fixed for like 5 years or 3 years, depending on the time. But the interest rate start to accumulate it, and then you have to make payments every month per the loan agreement. Line of credit is almost like a credit card, but a business credit card, but it have lower interest rate. But then when you apply for line of credit, the process a little bit longer. So basically, line of credit is that you just have a facility, available amount that approved by the lender, and then you can draw it, that you can take money out anytime you need, and then you can put money back in anytime that you want. So you only pay the interest when you're using those funds. So would it be better to use a loan or a line of credit? It depends, and that's where a lot of CDFIs or business counselings come along, that you can reach out those resources. The business counselors or loan counselor like me will explain to you. It depends on what's the better situations for me. Let's use an example. For Joe, he wants to purchase a truck. So he needs the fund right away, and he knows that he can only make certain payments every month. So for that, he needs to take out a loan because he needs the lump sum payment plus his down payment to the truck dealer to get his car, the truck. So it's going to be a loan. And in these situations, he will use his truck as the collateral. So that basically, which means this is a secure loan. When a loan is secure, which means that if for some reason, if he doesn't make payments on time, the lender can take the truck, the collateral that is used to secure the loan to pay off to cover the loss in the loan to the lender. So because of that, the interest rate is usually a little bit lower comparing to an unsecured loan that the lender has nothing in hand to recoup in case the borrower default. Then usually those will have a little bit higher interest rate. So those are the difference between a secure and unsecured loan. And line of the credit is typically unsecured, and then the interest rate is a little bit higher comparing to a secure loan. So, but for this case, Joe, he should use the loan, right? Because he needs the lump sum payment in the beginning, and he can only pay off that he expected to pay off in 5 years. So each month his payment is fixed. Then he can plan for his cash flow. But a different example, Joe, all of a sudden he is hired by the school districts right close to his house, and then does the elementary school need to redo all the plumbings and everything. So he has a big project in hand. So he knows he need to buy equipment fast in the coming 3 to 6 months. A lot, that's a quite lump sum of the payment, but he doesn't need all the equipment or all the supplies at the first date. And he also need to hire workers to help him, but he doesn't need to hire that 3 workers at the same day starting from the month 3. So in these situations, he does need some working capital to help him to pay for the upcoming expenses, including labor and materials, but he doesn't need those at the first day. So at these situations, a line of credit works better because he will go to a bank to apply for, okay, I have a $50,000 line of credit, and then available now, the bank approves for that. And then the first day he needs to buy materials, he starts to draw money, like let's say $5,000 to buy the pipes for the school district. And because that's only that $5,000 he draws on month 2, that is only that $5,000 start to generate interest. But the remaining $45,000 available in the line is still sitting there available for him to draw, but there's no interest rate accumulating yet. So this will save him some money, interest, comparing to he applied for $50,000 loan, and then he have to pay interest right away for the whole $50,000. So that's the difference between a loan and a line of credit, and it depends on the business situations. Then you will choose the one that works the best for you. And that's how a lot of the nonprofits like us and other, there's other nonprofits to coach small business owners, then to help you to identify which product works the best for you, because we want you to save interest, and we also want you to be able to be successful. So that's why this really go together hand in hand. And there is some other type of financing, debt financing out there, and some of them including like receivable factorings. And this is really getting more popular in various way. And for example, some people, they do drop, one of my clients, they do drop shipped of the products to Wayfair. And but then Wayfair never gives them a contract, but they only give them PO, which is the purchase order we talk about below. And so they, but my clients need money to pay for the vendors right away. So in order for him to get the receivable faster, because he already delivered the products to Wayfair last night. So he will set up something called receivable factoring. There's another financial institutions will come in once they see the products already delivered, and they will give them, let's put an example, 95% of the sales. And then when Wayfair pays the invoice, they pay directly to that factoring company. And then so by doing so, my client doesn't need to wait 30 days when Wayfair to make the payment. He can make his vendors the drivers who deliver the trucks right away. So this is something called receivable factoring. The next one will be purchase order advance. Basically, another example would be a manufacturer for a supplier for Walmart. They have a large order that Walmart already placed with them, but this client needs to manufacture the products, but he doesn't have enough fund. But at these situations, because he has not delivered the product to Walmart yet, right? So that's not accounts receivable. He only has a purchase order in hand. He still need to make the product before he can deliver the product. So what can he do? He can just go to some financial institutions. They will look at the purchase order thinking, okay, this is a purchase order from a large institutions, and they know that there's history, they will pay. So they will give them a certain percent of the funds to help this client to have sufficient fund to manufacture the product. So those are so-called PO advance, purchase order advance. And the next one will be where I think maybe a lot of business owner will be very familiar with. Basically, is equity leasing, just to lease a truck or lease a machine. So those are all type of equity financings that you can think of which one you need and which one works the best for you for your business. And every industry may have a different need, just like we mentioned different examples we have up there as even like Joe's business, right? So either he needs to buy a truck, he might use equipment leasing, but when he have a big project from that he needs to work for to complete for a school district, then line of credit might work better for him. So you may ask, is there any other financing opportunities out there? Yes, there's other type of financing, including but not limited to grants. Government does offer grants from time to time. It has a lot more grants in the last several years during COVID. But depending on what industries are, and especially if you're in the technology industry, governments always fund different research and different things, and through either SBA or through other organizations. So you should keep your mind open to look at what other possibilities there to see if any grants specifically related to your industry. Those will provide a good seed money, you can buy some equipment or you can do some research, and that the government grant is a great idea to get started, but it depending on which industry. So just do more research and find out which one works better for you. Grant just as the name it says, you don't need to repay. You only need to deliver to follow what your proposal that you actually do when you receive the grant. And other type of financing include also including crowdfunding, such as for example, Kickstarters. And you don't need to they don't take ownership of your company. You just need to promise that you share the product with them. And those are all innovative type of financing. So we touch base on the several type of financing. So you may ask, which one should I choose? Which one is the best for me? As usual, it's always the answer is it depends, right? Because devil is always in the details. So go back to the examples we have earlier, and if Joe, he's a very strong-minded, and if he doesn't have, he knows himself, he doesn't have a very good interperson skill, so it might not be the best way to have his brother-in-law Paul invest in his business as an equity investor. because he knows this, he will argue with Paul all the time about the business directions, how much to charge, and should we hire another one right now and put a lot more money into marketing, or should I go grow the business organically one step at a time? And they might get into too much arguments, and then it might not be a good idea for Paul to be an equity investor. Or both of them might be very logical, and they will look at data, look at the markets, and they can sit down and really discuss what's the best approach to help the business grow. So for that situations, maybe equity investment by Paul into Joe's company is a better idea. So that's it depends on different situations. You as a business owner, you know your business the best, you know your personality the best. So I think that and you also know the potential investors or private lenders personality and style the best. So our job is to help you to understand the situations and then to find the best way that works the best for you. And it also depending on your overall family situations. Joe has been saving monies in the last 5 years he wants to start his business, but maybe Joe's wife just have a new baby, and they're excited about that, and they want to put some money down for the first home that his wife really wants to have to let the family grow there. So maybe Joe have saved up like over to $80,000 in the last 5 years, but the wife wants to spend $50,000 down for a small house, and if that's the situations, maybe Joe needs to borrow more money from Paul or ask Paul to be the investor into the company. And so those are your overall family financial situations also plays in which direction to go when you look for the financing for your business. So we cannot forget about that. And also the reasons that we mentioned here about your overall financial situations, when we underwrite the loans, not only we look at the business cash flow situations, we also look at your personal financial situations. Do you need to, like the example we talk about, is Joe the only money makers in the family because the wife just have a newborn baby and then she will stay home to take care of the family? And for that situations, basically in some way that Joe doesn't have other income to cover the debt payments if the business does not go as planned, as well as he planned, right? So this will have somewhat of the impact on the situations when we look at the Joe's loan application. But on the other hand, if Joe's wife also has a stable income and he's a school teacher, so he will resume back to work after the baby gets a little bit older, and she will have her stable W-2 income. And if that's the family dynamic, and the lender will look at the Joe's loan application a little bit differently, because we know that Joe doesn't need to withdraw money from the business to pay for his family expenses every month. So this also plays in how we look at a loan and why overall financial situations have impact when you apply for a loan, or they will always ask, why would you want to know my situation? I'm applying for a loan for the business. But yes, lender do want to understand the overall pictures of your business finance and also your personal finance. So this leads to the last questions that or topics that a lot of our business owners will ask. How to prepare? Where should I start? No matter which one, no matter either equity investors or debt financing. So you need to have, the first thing is that you need to have your own money invest in the business. How much? It depends. Again, I hate to say that, but also it depends. But for sure, you need to have some of your money invest in the business. either some of our lending partners and some of the partners, the panelists will talk about that different banks have different products. But on a high level, no matter you are looking for equity investors or loans, the first questions the other party will look at that. You say you believe in your business, but do you have a skin in the game in this business? Are you committed to this business, and you not only you believe in it, and you also commit to do it to make it grow? Let me use two examples I ran into in my loan cases. One of the cases is two partners. They are starting a high-end barbershops in Pasadena. So one owner has about 35,000 saved in his own personal account, and this is his job. He's the barber. He will do all the actual works. And there's there's a partner, another partner. He owns his own business, and he's making about $180,000 a year, and he has about 100,000 saved in his bank account. So both of them, they come to borrow about 100,000 from PACE to do tenant improvements to a new locations they set up for the barber shop. And then the total project needed, the fund needed is about 150,000, and two of the owner will put in 50,000, and then they want to borrow about 100,000 for a loan. And one of the questions that I got asked by the loan committee, which is looking to approve or they're looking to underwrite the loan to see if they approve the loan, is that this particular one of the owner, he's making $180,000 a year. Why does he only put in 50,000, even a little bit less, because the other partners put in also, he only put in 40,000 into this business? Does he really believe in the business, or he just want to try it out and use the lender's money to see if this will work out? And so this is one of the example, right? Because he has the capabilities to pay more, but he's only paying a little bit as an investment into the business. On the other hand, one of my other clients, and they both work for Target, and they're going to start an ice cream business, and they buy those portable ice cream trucks, and they want to sell it in the farmers market and the other events. And both of them has about $60,000 annual salaries, and they all have children's need to support and the family to support. And they are looking for $8,000 to buy the trucks, and then because both of them will put together, they will put $2,000 into it, so they're borrowing $8,000 to buy the trucks. So that this basically not a truck, ice cream portable trucks, portable cart. So for that, the loan committee members, they see the sincerity, and they see that they both still keep their jobs, and they see that they invest a significant portion of the savings, even though the amount's only $1,000 each from the borrowers, but they invest what they can into this business, and they're willing to work like over the weekends. This is the part-time jobs to do it. So they see that they invest what they can, and they believe in they can make the business successful. So they're okay for the investments only $1,000 each to the business. So this is just an example that when you apply for a loan, or when you ask other people to invest in your business, the other party always want to see how committed you are to the business. Are you doing what you're saying? Really believe in your business and really work hard and invest your own business money into the business. So that's a very critical starting point, for how to prepare to look for financing. No matter it's equity financing or debt financing, other party want to see your commitment, not only time commitment, but also your financial commitment. And the second bullet point is that I cannot emphasize enough that from day one, you should have your financial records ready. What I mean day one is that if you make $5,000 into buying a truck, you better start to have a bookkeeper or you do it on QuickBooks, you just enter into the system. No matter where you go to look for equity investors or investments or from a lender, we want to see your numbers. We are number people. We want to see what's numbers reporting. Yes, you might have a really good business plan. You might tell us or the investors or the lenders, I have a great projections. I know I can do this, but we need to see the numbers. Numbers don't lie if you do your bookkeeping records correctly. So I cannot emphasize enough that this is very, very important. And then file your tax return on time. And I know that there's always, you can ask for extensions every year, but let me give you some real examples. In May, which if you don't file your tax returns, your extensions for your tax returns, in May, by the time that you should already have your tax return records. And as a lender, we pull your records with IRS to verify if the copy you gave us is the copy that you file. The reason is that this is part of our due diligence. We have to do. But if in May you come to apply for a loan and then your 2022 tax return is not ready, and you only have your 2022 internal financials ready, as a lender, you put us in a very difficult situations because we know the internal financials can have a lot of adjustments. They may not be finalized yet. But if we only look at your 2021 tax return, that's more than 1.5 years ago. Things might have changed a lot. So this will create you actually by filing the extensions for your 2022 tax return, create a hurdle for a lender or for an investor to really invest in you or give you the fund, because things change so much already, especially in the last several years. Financial situations change a lot, market change a lot. And then how can anyone look at your 2021 tax return to say, I know this would be the, Joe, your business would almost look like how 2021, and we know how you would look, your financials look like this in 2023. So if anyone's in the audience, you're planning or thinking about to apply for a loan or look for equity investors anytime, I couldn't emphasize enough that please file your tax returns on time. And then also please have your bookkeeping records ready, because that's everybody's looking for. And then the last one will be, as a small business owner, or if if you get when you grow bigger, it's the willingness to learn, and this will help your business grow. No matter learn from other, the audience today, from the panelists, or from anyone, because there's always inspirations that you can get from meeting with other people and learn from the other people's success story, learn from other people's not so success story. So this is my presentation today, and I hope that I give some insight for everyone that for what we do, and then also what, as a business owner, that what ways out there you can think of to fund your business. And then we welcome follow-up questions, and then a lot of the areas I just touch base regarding loan products or banking products, and then we will hand over to our panelists to give us further discussions. And this is my contact info on the screen. You can send me emails, and we can always answer questions if we cannot address it today during the Q&A sections. Thank you, everyone.
Thank you, Jennifer. There was a lot of information there, so I'm pretty sure many still have questions. They want to come back to us and ask questions. Please, everyone, feel free to write your questions. Laura, I can see that you have your hand raised up. I would appreciate if you give us time to have the panelists also present their information. then definitely we will give everyone a chance to like write their question, or if you want to like, speak and, ask your question, you are more than welcome to ask your questions. So now we have the next, like our panelist, Vanessa, she will talk about the products they have. And let me, I will let her to introduce herself, so we will save the time. Vanessa, I will share your presentation also.
Thank you so much. Good morning, everyone, and happy Friday's Eve. We're almost there. Let me know if you can pull up my.
Yes.
Thank you so much. Could we go to the first slide, please?
Yes. Can you see this?
Yes.
Okay.
This is a different format, huh?
Vanessa, do you have a problem with the slide? Or?
Slide, if you can go to slide 1, please.
Oh,
I think we're on 7.
Oh, let me just. Oh, I'm sorry.
It's okay. It's okay.
I didn't notice that one. Okay.
There we go. You're good. You're good. Thank you so much. Well, everyone, again, good morning. My name is Vanessa Ramos. I am a branch manager at Comerica Bank. My office is located in downtown Los Angeles. But I always say I go to my customers. So wherever in Los Angeles you are located, I'm always happy to meet, whether it's at your place of business or at a branch closer to you. I always say as a branch manager, I'm kind of the face of the bank. I have a lot of wonderful partners that specialize in different things, whether it's business loans, merchant, and we'll go over a couple things. But I'm kind of the coach that kind of brings it all together. And so I'm excited about Comerica, a little bit myself, and how I can be a resource to you and to your business. Okay, if you can please go to the next slide. Oh, that's my information, by the way, my branch phone number, and I'll give out my email as well at the end of the presentation. Okay, I want to start with relationship banking, and I know that this is access to capital, but truly to get to a point where, right, everyone's goal is to become lendable. It's truly about having that relationship with not just the bank that you end up choosing, which it's a big factor, but also with the person that you choose to do business with. Ideally, everyone, when they start a business, their goal is to make sure that that business is successful and it generates income. And so your banker should be a trusted advisor. That banker should be the same way your CPA and your business attorney will be contacts that are saved on your phone and that you have, a frequent touches with, right? That should be your banker. And you're in your financial institution, because there's a lot of choices out there. And so really, how do you know if you have a good relationship? So these are just a couple questions that, whether you already have a banking relationship or you're thinking of establishing, you're starting a business, you need to establish. How do you determine, do you have a good relationship? I see a lot of people starting a business and they tend to, well, I'm just going to go open an account where I have my personal account because, I've been banking at this bank because my mom and dad went and opened an account for me when I was just a little kid. So I've always been there. So how do you determine the relationship? Well, do you have a banker assigned to you? Is it a rotating door every time you go in, there's a new face? Do you actually have a banker? How well do they understand your business? Are you guys a good match, right? Not everyone matches, and that's okay. Second, do they recommend ways to save time and save money, right? Are they someone that I trust? Do I feel appreciated, not just by that banker, but by that financial institution? How well does that financial institution service my industry? This is key. If different industries have different needs, that's why it's important that you interview banks and that you interview bankers. Does this institution make sense for me to bring my business to that institution? And lastly, and I think this is what's most relevant for this presentation, is can I grow with this financial institution? Goal being, can they offer me lending and future products to take me to where my end goal is? Okay, next slide, please. So I kind of touched on this, but really where it all starts when you're looking at a bank for lending is that relationship. And the way that most financial institutions will categorize if you have a relationship and how deep your relationship is all based on that business checking account. That's why I urge people, again, don't just open an account where you do your personal. Make sure that it fits you, right? So I'm just going to give you a little detail on here personally on Comerica, what we value, and a couple things with our accounts. Our business accounts actually have no monthly minimum balance requirements, which is very attractive to startup businesses that are maybe counting pennies, right, to purchase those things needed to go live on their business. So with no monthly minimum balance required and no monthly service fees, that monthly and yearly saving is it's a good thing for our business customers. By being a checking account holder, you do automatically get a complimentary personal account. Again, you're saving on service fees now, both on your business and on your personal account, regardless of balance or activity requirements. And then circling back, that it establishes that business banking relationship. So now, which we're about to get into lending, when you're going to a financial institution, one of the things that the bank looks at, hey, is this an established client? What's the depth of their relationship with us? Next slide, please. Business credit cards. Okay, now this is something it's very good for startups for a couple of reasons. For a business credit card, you do not need tax returns, right? So when you're going to a financial institution and you're asking for lending, they're going to ask, okay, well, we need at least 2 years of business tax returns. Well, when you're a startup business, you may not have that, right? You're not going to have that. So this is a great way to start, is to get a business credit card. The great thing about the business credit card is that the credit card is going to report under the tax ID for the business. Why is this helpful? If on the personal side, let's say tomorrow you're going to buy a house, and so you're applying for a personal mortgage loan for your home, any debt that's on that business credit card will not be considered for an LLC or corporation as personal debt when it comes to running your debt to income ratio or even pulling your credit report. So this is super, super helpful for business owners. It's a little different when it's a sole prop. I'm just talking about LLC and corporation. And for more details on that, I will encourage you to talk to your CPA. But this is one of the key benefits of a business credit card, not a personal credit card. In addition to that, a business credit card is it's a great way to establish business credit, especially with that financial institution that you're opening that checking account. I personally always recommend to my business owners, when we're opening a business account, set up a business credit card. Why? Because in a few years, when you come back to me and you say, Vanessa, business is great, I want to expand, I need that extra truck so I can pick up more, get more customers. I'm going to say amazing. Well, what type of business credit do you have? And business credit and personal credit are different, right? It's kind of like when you first turned 18 or you first got to this country, whatever the situation is, and you had no credit, right? You had to build credit under your personal social. Well, that EIN number needs to create credit history as well. So it's very, I don't know why someone wouldn't get a business credit card, especially when establishing their business. A couple extra benefits is if you have employees, you can give them credit cards under yours with very small daily limits. For example, let's say you're a trucking business and you have a couple truck drivers out on the field. They need to be able to stop and gas up, right? So you can give them cards with, let's say, $150 daily limit. Set up alerts so you're alerted when they use them, but those points generating are coming to you. So that's a way to get more money in your pocket. So just a couple benefits. I will quickly touch on some of the credit cards that we have here. This is probably one of the most popular, the MasterCard Business Cash Preferred. This one gives you 3% cash back on gas stations, which right now is huge, office supplies, cell phone services, 1% everywhere else, and it does have no annual fee. This is another one for businesses that need to purchase something. The MasterCard business card, it has 0% for 18 months. That includes balance transfers. Also, no annual fee. And lastly, we have the MasterCard Business Real Rewards cards, no annual fee. And rather than in categories, it just gives you 1.5 reward points for every dollar you spend everywhere. So that's just, again, I'm happy on a one-on-one basis to go into more detail on a specific product, but this just gives you an overview. Okay, next slide, please. Okay, so business lines of credit. And Jennifer kind of went into a little bit of the difference of a line of credit versus a term loan. But just to kind of reinforce what she said, I think as a banker, a lot of times people come to me and the first day, I need a business line of credit. But once I talk to them, I discover that that's truly not what they need. They need a term loan, right? And it's not one size fits all. It's really one-on-one base, which again, I'm happy to do on a one-on-one basis. Someone has questions, but just kind of a rule of thumb, a line of credit is something similar to a credit card where the product is not designed to carry a balance long-term. It's kind of to mitigate those instances where, for example, construction business, I got hired to do a job, so I need to buy supplies. I need to pay my workers to get this job done. But at the end of the day, once I finish the project, I'm going to get that check and I'm going to pay this off. So I need a few months or so. That's what a line of credit is designed to do versus I have a big purchase. I need to purchase a truck for my business or, for my plumbing business. And I need about 3 to 5 years to pay it off with a fixed monthly payment. That's more of a business term loan when it makes sense. But here at Comerica, we offer a few different lines of credit. We do have an SBA 7A Express, which is a great option. We also have an unsecured line of credit. Now, banks will put liens on your business when they offer lending, not credit cards, but when they offer lending. And so we actually offer an unsecured line of credit, which means we will not put a lien. Now, the requirements to qualify for an unsecured line of credit are going to be higher than for a regular 7A SBA Express. For example, just to give you that we would need at least 12 months of average deposit equal to the amount requested. But these are just giving you different options. And then, of course, we have a collateral secured option. So if someone, for example, has real estate, we can extend lines of credit on that. I don't want to get too specific on products because I think that would, and the requirements for each, I think, again, that's more of like a one-off conversation to have, but just trying to give you a range of what we can offer. Also, like I said, I'm kind of like the face of the bank, but luckily I have some great partners. And so if you need more information, I can also do an introduction to them, and they can give you a lot more details, including rates and how to apply, etc. Next slide, please. Business term loan. So I kind of already jumped into this when a term loan is more appropriate than a line of credit, but just to give you a little more. So a term loan has a fixed rate. A line of credit does have a variable rate, and it's going to have that fixed monthly payment. Usually term loans are anywhere from 3 to 5 years. The way it works is if you get approved, they're just going to give you a one-time lump sum access to funds. They'll put it in your checking account, and then you kind of go from there. If you're purchasing a vehicle, then at that time, the bank might pay that lender directly. And this is great. It's a great loan for those who need equipment. So restaurants needing a new stove, or, new ovens, dentists needing new x-ray machines. We were able to finance someone who actually, for their break room, they needed a new water filtration system, furniture, all for your business. All of that is considered equipment, and that's lending that can be provided to you as well. Okay, next slide, please. Okay, and so access to funds, I always say, and this is where it goes back to having a good banker, is also saving money, right? So if you're saving money and you're having access to funds quicker, then you do have more capital available to do what you need to do. And so this is another way that we can help. How do you accept payments from your customers? And nowadays, you really do need to be able to accept debit card and credit card payments. And Comerica does offer our own merchant processing. Right now, we do have a promotion where if you do need to sign up and get a new machine, and nowadays you don't even need, depending on your business, right? Retail, usually you do need that machine, that credit card machine. But a lot of times we do have an app where we can integrate with your software, and you can do online payments. But we do have a $400 rebate. Again, happy to talk offline more about this if you have questions. But one of the reasons, and if we could go to the next slide, please. One of the things I hear a lot of people, well, I just signed up for Square, or, I just went with them. Again, it goes back to that relationship. When with merchant with us, you do get next day funding, which is big for business owners. Sometimes with Square, I believe it could take anywhere from 2 to 4 days to get access to those funds. That money is deposited within next business day. Again, customer service, it goes back to having that relationship with that bank. For some reason, though, something happened, who's your point of contact? I believe with Square, you're going back and forth with emails. You would, wherever you do have your banking relationship, being able to speak to someone live in person that knows you to help manage that. And we now offer even contactless payment. Like I said, we can pretty much integrate with any system. So merchant is something that I highly recommend to people. Regardless of what level your business are, if you're starting off or if you're established, helping your customers have a way away from cash, and away from check writing, that can at the long run mitigate fees for you as well. Okay, and next slide, please. And last but not least, this is a home equity line of credit I want to talk about. And I know this is not a business product. However, and I think Jennifer at one point mentioned something, a lot of business owners, when they come, especially starting off a business, they may not have tax returns, and they need more than what a business credit card can offer. So traditional business lending may not be an option, right? So for those who are homeowners, some points having a home equity line of credit is something that ends up being very useful for them. With the home equity line of credit, it can, if you have a mortgage, you can, it's okay, we will be in second position. The way it works, it's kind of like a business line of credit, but you have a 10-year draw period that's usually a bigger draw period, a longer draw period than a business line of credit. A 20-year repayment, what does that mean? So if the 10 years comes up, the line of credit matures, you have a balance, they will term out the balance for you with fixed monthly payments up to 20-year repayments. This product itself has an $80 annual fee, which is very reasonable, and it's waived the first year. And it could be done on a primary or on a vacation property, not investment property. I just want to make that clear. That's the end of my presentation. I hope that some information I gave you is useful. And again, I am available for calls or appointments in person if anyone has any follow-ups. Thank you.
Thank you, Vanessa. You shared a lot of information, and I'm pretty sure that, like the information you shared, there's a lot of good products for the small businesses, and I am hoping that everyone will take the note and they will connect with you, to get more detailed information. So we have next Reddy from Cathay Bank. Reddy, I will pull out your presentation. And I appreciate if you just start to introduce yourself and then, tell us about your product for the small businesses.
Yes, of course. Before I start, I just want to say good morning, everyone. And thank you very much, City of Glendale, for inviting me to present our products and services at Cathay Bank. And thank you very much, of course, Pace, specifically Jennifer and Bartui. And my name is Reddy Babasa Thompson. I'm the first Vice President Senior SBA Business Banking Relationship at Cathay Bank. I will be presenting SBA products, which is SBA 7A and SBA 504 that we offer at Cathay Bank. Before I start, I just quickly wanted to read the mission statement of Cathay Bank. It is the mission of Cathay Bank to be responsive to the financial needs of our customers and the communities we serve. We are committed to providing a broad spectrum of personal and commercial banking products and services, and are here to develop meaningful, long-term relationships that demonstrate our appreciation to our customers, businesses, and our commitment to their financial success. And there you are. So let's go to the next slide, please, Bartui. Here are the eligibility for SBA. Borrower must be for profit, be small according to SBA size standard, not be nationally dominant in its field, be physically located and operated in the US. For both 7A and 504 loans, applicant must occupy at least 51%. Of the specific commercial real estate. Have an eligible purpose, no investment, no lending, must be a legal activity. Next slide, please. Most common purposes for SBA loans. First is purchase of existing business. Sometimes it's a change of ownership, like restaurants, liquor stores, grocery markets, dry cleaners, or boba cafe, which is very popular nowadays. Purchase of owner-occupied buildings, such as warehouse, industrial buildings, office buildings, and retail buildings. Special purpose properties financing, like hotels, gas stations, and so forth. Refinancing of existing business debt. For example, real estate debt incurred by the business can be processed by 7A or 504. Next slide, please. Here are the requirements for borrowers. You have to have a good character, management expertise, reasonable business equity, adequate working capital, ability to repay, citizen or legal resident. The most important is that the borrower has sufficient cash flow, which historically financial statement provide cash flow projections of future earnings and sufficient to repay the anticipated debt service. What does this mean? When you applied for whatever kind of loans, it might either SBA or other commercial loans, what the lender are looking for is your cash flow. Cash flow is meaning the profitability of your business. So typically a lender is looking for at least 1.25 debt service ratio. So running a business and making it more efficient is you have to basically focus on how you will make your business really profitable in order to qualify for such loan. The products that I'm presenting right now is SBA 7A and 504. These are mostly for a client that are established, that's been in business in the last 3 years, and that their profit are profitable and climbing every single year. I say this because I believe most of the participants right now are startup, and in years to come, you will be in the situation where you're going to be applying for this kind of products, and you have to get yourself ready by focusing on your business, on how you will become more profitable, how you will become more competitive, how you will become more noticeable to all the client that need your services. With that, would you go to the next slide, please, Bertuli? Here are the initial documents for screening. For a 7A, in which the maximum loan amount is up to 5 million, borrower or guarantor, here are the requirements, which is usually we require for 3-year business tax return. And for the individual who is the owners, we require 3 years as well. We just require for the federal on this part. And of course, the interim financial statements, which is the current year. If we talk about the interim financial statement, it would be just like 2022 tax return, which is the profit and loss and balance sheet. And those are just the initial requirements of most lender requires to see if you will qualify to apply for a loan, depending on the loan size that you required. And this is how we measure and see if you will be pre-approved. And if, for example, you are trying to buy a commercial real estate, we require sellers' financial information, such as the last 3 years of their federal tax return, and as well as the interim financial statement. We also require a purchase agreement, and evidence and source of down payment are required as well. For SBA 504 loan, the borrower, the required financials is similar as well. It's a 3-year financial statement, as well as the interim financial statement. These are all similar. The same as the seller's financial information is required as well on a 504. So you can take a screenshot on this and you can keep it. And if you need assistance on it, you can directly contact me. I can further discuss with you every single flight of this presentation that I'm doing right now. Would you go on the next slide, please? And collateral. A loan must be adequately secured to extent available. Personal guarantees up to 20% or more owners. Lien on personal asset is under collateralized by business asset. What does this mean? When you apply for an SBA loan or any other kind of loans, usually it's secured or collateralized by a fixed asset. It's either your home or your business. The lender will, when you get approved, they put a lien on your business, and usually as a first lender, lender always wanted to position themselves first, and and the others should follow if you qualify for another loan when you applied for. So basically, when you get yourself ready, you want to make sure that everything is set for you to qualify for such loan as like 7A or 504. Next slide, please. And here are the eligible purposes for a 7A loan. For a loan size 5 million, these are the purposes, as you see right here. Purchase of existing building, so on and so forth. You may take a picture of this and keep it for yourself. And again, you can directly contact me, and I can specifically discuss with you what these eligible purposes are for. Next slide, please. And this is for the 504. The 504 maximum loan size can go up to 18 million. And this is basically consists of 3 parties, 50% for the third party. For example, if they're buying commercial real estate, the 50% is the loan A, which is Cathay Bank. The 40% will be the CDC and then the 10% will be the borrower. And here are all the purposes for 504. You can take a shot on this, and again, give me a call should you have any specific question on all of these purposes. Next slide, please. That's how easy my presentation is. It's quick. You just have to directly call me, and I can answer whatever question you might have. Would you return back to my first page so the participant can take a shot on my contact information?
I have also shared your contact details for every speaker. I shared it in the chat box, so yeah. Mike, it is there.
Well,
but
thank
again,
you. Thank you so much, everyone. And there's a lot to discuss about 7A and 504, especially when you are established business. And it really helps a lot. So I welcome all of you to contact me should you have a question on my presentation. And thank you very much.
Thank you, Reddy. Thank you very much for the information you shared. So now we have, let me stop this, and we have John from Enterprise Bank and Trust. John is the market president. So I will let him to introduce himself, and then, after, we will have the chance to answer the questions. Let me pull out. Okay. There we go, John.
Well, great. Thank you. Thank you, Laura. We appreciate that. And good morning, everyone. I appreciate the City of Glendale and PACE for inviting me to be part of this presentation. And I also want to thank all of you who are attending this presentation for taking time to invest in knowledge and invest in the success of your business. We at Enterprise Bank and Trust, and then we can go to the next slide, were founded in 1988 by 3 entrepreneurs. Similar to you, these were individuals whose core concept was to build a first-class bank that focused on private business owners, professionals, and their families. And since our founding, Through a collaborative and consultative approach, we've been committed to serving the lifetime financial needs of our clients through trusted personal relationships, which, as you heard, are very important and key to the success of any business and organization. And for that, our mission is very simple, and that is guiding people to a lifetime of financial success. We're a little bit of details about our bank. We're about 13.1 billion in assets, which is another factor that's important when you look at participating or partnering with someone. In addition to that particular institution looking at your balance sheet, right, your business plan, your business model, you also want to look at the capacity and the strength of that financial institution, which for the most part is public information. So you want to look at the strength of that financial institution in terms of their assets. What do they normally do in terms of community impact? And then also, how do they collaborate and partner with its clients? And we can go to the next slide. Part of the foundation and success of a business is very important to be able to align and develop that solid foundation so you can build upon as you continue to go forward on your business. I always say that, aligning the products are also important, but then also aligning key individuals as trusted advisors are equally important in solidifying a foundation that's going to allow you to build and build and build upon so that you can continue to grow and establish a legacy, whether it's something you're going to sell in the future and retire from, or you're going to transition that to the next generation to continue to operate and move forward as a legacy. Regardless of those are key components that we see are very important in terms of solidifying and establishing a solid foundation. One of the things that I know was touched on a little bit, but I want to reiterate and reemphasize the importance of is when you're looking at the financing structure and mechanisms that are important for your company is to be able to understand and know with your banking partner, what is the need and the use of that? Because many times I've seen where a client has been given or has obtained a line of credit. And typically, as you heard, the line of credits are very important to be able to show revolving and that you have the ability to use, pay down. So I always say, as a rule of thumb for a business owner, if you're going to take longer than 6 to 12 months to pay that off, the line of credit is not the appropriate product. It should be a term loan or it should be a different type of financing mechanism. But if it's going to be able to be repaid within that 6 to 12 month period, then the line of credit could serve that need or serve that purpose. And unfortunately, sometimes we've seen where that alignment hasn't been in place. So then the line of credit comes up for renewal and the client is talking to their other bank and the bank says, well, we're not able to renew your line of credit, but failed to be able to identify the fact that the initial purpose of that was not correctly matched to what the need was, right? So very important to keep that in mind as you look at the financing mechanisms for your business, that they are aligned with the correct purpose and use so that you have the ability to demonstrate to any lender that you are effectively using, for example, a line of credit. Also important is the type of treasury services, or what we refer to, your checking account, your supporting services from that bank in terms of ease of access to your cash, to your funds. That's also important because you want to be able to maximize the availability and the accessibility of those funds so that you can then use them to either pay down a credit facility or establish automatic sweep functions so that you're not paying interest on 30 days on an outstanding balance, but maybe end up paying interest for only 15 or 20 days if you establish a sweep that flows in and out of your checking account, allowing that line of credit as you collect on your receivables or as you collect on invoices from your clients, you're effectively cash flowing and utilizing those funds. So again, you're saving on the interest on one end, and you're also effectively maximizing the efficiency of the cash that's coming into your business. So those are the key points that I wanted to talk about in terms of products here. The other thing also, just in general, at the end of the day, we all have very similar products, very similar services, But as it was said earlier, the importance is establishing that relationship and that partnership with a banker and someone that you feel understands, knows your business, can value and be an advocate for you within that organization to help accomplish the milestones that you have set for your company. Another aspect that we can go to the next piece there, Bartui. We also have, as you heard earlier, a little bit of a microloan program, and this is a unique program that we partner with PACE, and we're very proud of. It's a $1,000 basically microloan that has a very low interest rate of 1%. It's 36 months with fixed monthly payments. And as you can see there also, there are no payments for the first 90 days, and it's a 33-month repayment ability. There's no minimum credit score requirement, no fee for the application, and also no early repayment fee if you decide to pay it off early. And another great tool and advantage here is that you also get to have the benefit and the support of PACE in terms of being able to assist, whether it's developing a business plan, expanding on your business plan, providing technical assistance to in your business in order to establish and get to those different milestones of growing your business. We can go to the next slide. So before we get into our Enterprise University, one of the things that I like to always talk about is the ABCs of support and advice. And that's having a good attorney, a good banker, and a good CPA. And collectively, those three individuals, along with the business owners or principals of the company, should be getting together on a biannual basis at a minimum to be able to identify and provide guidance in terms of what adjustments have to be made in order to reach those milestones that you have set for your business. Because at the end of the day, nothing is a straight line. I always use the analogy that if you board an airplane in LAX bound for Hong Kong, and the pilot puts the airplane in automatic pilot, you're not going to get there. Why? Because the pilot has to make adjustments along the way. The same thing is in business, the same thing is in life, right? It's never a straight line. You have to have those adjustments along the way. And in order to do that and do that effectively, you need to have those, what I call advisory board individuals or trusted advisors that are around the table providing true, transparent, and qualified guidance and advice. Because at the end of the day, sometimes, as business owners or family close held businesses, we may have surrounded ourselves by what I say, yaysayers. Every idea is a great idea, when in reality, it may not be, right? It may not be the next step or the right step for the company to reach a certain milestone. So that's where these type of individuals collectively with you or the business owner or the principals of the company should be having that conversation, open dialogue in terms of, well, how is that going to get us to point B? Or have you considered this? And then making the appropriate adjustments. I know it was said earlier that the importance of quality financial reporting, and that is so true, because in order for you to inspect what you expect, you need to have those tools available to be able to generate that quality information to others that you may want to present that to. But most importantly, for you as the captain, as the pilot of this airplane, or as a pilot of this ship, to be able to make the appropriate adjustments in areas that perhaps may be swaying out of control and are impacting the bottom line of your business. And you can only be able to do that by you being able to have that information readily available. So again, very important to have, again, what I say, the ABCs of support: good attorney, a good banker, and a good CPA, and collectively get together to be able to have that round table discussion, open and transparent. One of the tools that we offer here at Enterprise Bank and Trust, and this is free of no cost, mind you, is Enterprise University. And no, it's not a commercial about the bank, and you're going to have all these commercials presented through the various courses that we offer. In fact, it's courses that are taught by subject matter experts on topics that are important for you as a business owner to be able to operate and successfully move your business to the next milestones that you have set for yourself. If we go over to the next slide. So type of courses that we offer free of cost to not only our clients, but anyone, potential client as well, who is interested in attending the courses. And by the way, they're virtual. And some of these courses are also available off the shelf, which means that sometimes we may have ourselves or employees where we may not be able to allocate the time to attend a particular virtual course. But if it's one of the popular courses that we have available, you can actually pull that down from the shelf and go through that course on your own time to be able to, again, equip yourself with the knowledge and the tools that are not only important for you, but also for your employees, as well as stakeholders in your company, so that collectively you're all moving in the same direction, right? To be able to reach those milestones. Because many times I find that, unfortunately, you know, as a business owner, we may have all the ideas, all the great things we want to accomplish for our business, but they're all here. No one's written it down. No one's sharing it with other employees or key stakeholders. And we need to make sure that we write them down. We share them with other key stakeholders so that we also hold each other accountable in terms of how we're doing, where we're going, and that we're all pulling in the same direction. And as has been said before, you know, knowledge is power. So these are the courses where not only it focuses around topics around finance, human resources, sales and marketing, management and leadership, and tools that are not only important for you as a business owner, but can also be important for individuals within your company that you want to develop further, right? One of the key things, I always use the analogy that, you know, the success of a team is not having that one superstar only that may win the game. Is a collective effort of a successful team that wins the championship. So you need to also build that bench strength. And the way you build the bench strength for your business is to be able to equip the individuals with the right tools, the right knowledge, and the right resources, so that you have that ability to say, well, I'm going to delegate now this to so-and-so in the company. They'll be responsible for it. You still hold them accountable. You still have the ability to inspect what you expect, but now you are able to focus on other areas of the business that as you grow, you're going to have to be looking at the higher level, 10,000 foot level, 5,000 foot level, in order for you to expand and grow the organization or the enterprise. You may go to the next slide, please. You have some of the things that you can see here on the levels. We have not only introductory courses, but also advanced courses. So depending on the level of knowledge or comfort where you may be or your employees may be that you want to have participate, we have different levels available through our enterprise university. And as a matter of fact, that we're going to be launching our spring semester very shortly here. And this year we're celebrating our 20th anniversary of being able to offer enterprise university to clients and potential clients abroad. Next slide, please. So here's an example of, again, individuals that are teaching and are providing their knowledge and skills for the courses. And again, these are individuals that are subject matter experts. We're not having the courses presented by, you know, say yours truly or someone else within the bank that's going to basically create or do a commercial about the bank. Is really, again, providing the tools and the information that could be a valuable resource for you as a business owner and for your employees as stakeholders in your company to get the company in reaching those milestones that you have set for yourselves. Go to the next slide. So, I mean, my presentation was, you know, short and to the point, but I think some key points for me are, you know, that as I've been in the industry for over 30 years, the value and the importance that I've seen with many clients is the ability to impart and share the knowledge that we gain over the years. And sometimes it can also be with like type companies. And I can tell you that many times I've seen companies coming together where perhaps they may be considered competitors, but, you know, I always say 50% of something is better than 100% of nothing, right? And by being able to come together, there may be an area that a company is strong in and another area is strong in a different area, but collectively, you may be able to partner, collaborate, win that contract, win that particular business, and collectively grow as well. So it's been a pleasure for me to participate today. I thank again the City of Glendale and Pace for allowing me this opportunity, and for all of you for really investing in the time for you to learn, to grow, and to prosper within your business. Thank you.
Oh, thank you, John. Wow, a lot of information, and I really, really like this, like, you know, the university you have. So I'm going to check it myself.
I also, there's a lot to take away from John's is that I will steal your idea of the one that business partners should have ABC, you know, the attorney, CPAs, and bankers. So I will steal your presentations for that, for my next presentation.
Feel free,
And
Jennifer,
also-
and don't worry, I'm not going to ask for any royalties. Feel free to use it.
And also, I see that your because I think Watu and I, we work with a lot of PACE client in the past, and I couldn't I think the $1,000 offer by your bank, your partner with PACE, it helped a lot of the small business owners to build their credit. And then even though you think $1,000 is nothing at this stage, but sooner or later you will be talking to ready to apply for a loan to buy a 504 buildings. You know, things might be very change very fast, and then but everything start from the details, and then so when you need to have a good bookkeeping and the bookkeeping good records from day one, and before you know it, maybe 2 years from now you'll be like, hey, ready, I want to apply for a loan for apply for a building, and then they will say, when I talk to Vanessa, say, hey, I need to pull out equity line from my house and do something. And also, it's growing so fast, and then and this all good information starts small but aim big, and then I think this is something we'll take away. And I also, for John, that I just realized that you guys have specific products for agriculture industry and aircraft. So those are things I never know before. And for sure, and if any pipelines customers in my end, I will reach out to you guys. Those are lots of takeaway from your bank.
Thank you, Jennifer. Pleasure.
Yes. Okay, like we had a couple of questions during the session that, like, you know, Jennifer, Vanessa, they addressed the questions. We already respond to these questions, but there is one question like that still it's waiting for an answer. And one of the participants, she asked, or he asked, I'm sorry if I am like, if there, like you, any of like you guys, you are offering bank statement loan.
Say that again. What kind of loan?
Bank
statement only.
statement loan.
I don't think ready you for your for in order if any for ready for Kathy, at least the specific segments that ready is doing, because the client because if you want to buy a commercial building, I don't think you can rely on bank statement only, right? You need tax returns, I believe.
Yeah, of course. Any.
Yeah. You're muted.
Ready, you are mute.
Oh, I'm sorry. What I was saying is, in all lending, tax return, business tax return are needed in order to pre-qualify a client, or a client would be qualified for such loan. And of course, bank statement is not enough.
How about Vanessa? So how about Comerica? Do you have any loan products that they can only rely on bank statements instead of tax returns?
Business credit cards are pretty much what we could do without tax returns. But once you go into business line of credit, business term loan, or even a home equity line of credit, they're going to ask for tax returns. The little caveat to there is on home equity line of credit, if you're looking for a small amount, and when I say small, it can be, let's say, under 250, and you are a W-2 owner, I'm sorry, a W-2 employee, so you do have a salary that's W-2, and you've been in the business for, I mean, you've worked there for over, I believe it's like 2 years. Sometimes underwriters will not even ask for tax returns if the salary is high enough. However, I must be clear, that's not a guarantee. So it's not something we can go in saying, but depending on the debt to income and the credit score, and basically if the W-2 is enough to, income is enough to support the small request, then there's a possibility.
There's one answer I know for sure, and for Comerica's $1,000 loan, then it does not require tax return. That's for sure. I know that I processed it one time that for sure that doesn't require tax return, because that's the product to help small business to launch, to build your business credit as well as your personal credit. But if this a particular audience have other questions, would just send me an email. I can address it a little bit further, because again, Vartuhis and our job, because we are a CDFI, but we are also a business development center. So we do a lot of coaching and handholding that we might answer your questions a little bit further in a different angle.
Yes, definitely. During Jennifer, your presentation at the end, Laura wanted to ask a question. She raised her hand, so I want to give her a chance to ask her question. Laura, you can if you can unmute, if you want to ask your question, you can unmute yourself and ask your question.
Maybe she's not here.
I can see Laura there, but maybe she can. Okay. I want to give anyone who has a question, you can raise your hand. We have still a couple of minutes left. If you want to ask your question, you can write in chat box, or you can raise your question and ask your question. Laura, if you are hearing me, you can unmute yourself also and ask your question. I have shared the contact information for all the presenters today. So if you have any question, later come up, you have a question, you need to get more details, please feel free to contact any of the presenters, and we will be happy to help you. There is a question here in the chat box. It's asked, how do you enroll in the Enterprise University? So John, can you please just give us a little of information about enrollment?
Yes, you can just go to our website at enterprisebank.com/EU Enterprise University, and you'll be able to be taken directly to the spring semester and information available to register. Again, this is at no cost, and you can select from the various courses, or you can also feel free to choose from some of the courses that are available off the shelf.
Thank you, John. If you would like a copy of today's, okay. Can I get home equity? There is one of the clients asked if, can I get home equity line for credit for land?
So once the home equity line of credit is granted, you can do with the funds basically whatever you choose to do. But to secure the home equity line of credit, it would have to be secured against either a primary residence or a vacation home.
Thank you, Vanessa. Let me see if there is any other questions. So
if I may add a quick note. So I know that we have several banking partners here, and each banks, and they all offer even though sounds very similar products, but each banks have a little bit of their focus is slightly different. And then I highly recommend, just like every audience, just like you want to, including like what John's mentioned, attorneys, CPAs, and bankers, the same thing. Just like when you look for your physicians, for your doctors, you should reach out.
Hello, can I ask my question now?
Yes.
Yes, Laura, you can.
My first question is, thank you so much for a great presentation. My first question is the one by Ms. Whelan regarding the crowdfunding. Is that also free money? Because, you know, the slide went by so fast.
Yes and no.
How do you find crowdfunding?
Yes, crowdfunding, there's a very popular website called Kickstarters, and Kickstarter is a platform. They charge certain fees, but for Kickstarters, usually, for example, my very shallow understanding is that you put a project out there, the money, whoever give you fund through Kickstarters, they will not ask for equity interest. They won't ask for shares in your company. They will not ask for the payment, but typically you need to promise. For example, if you develop a game, once the product is developed, you need to give them how to use the game, or give the game product to them. It's more like they pay a product that they believe you will develop.
Okay.
So you have some form of obligation, but not necessarily directly financial obligations that you need to pay the money back. So is it free money? Yes and no, right? Your time is also money, right? So depending on how you think it, yeah. Mm-hmm.
Okay, very good.
Mm-hmm.
Thank you.
Mm-hmm.
Yeah. So
Mm-hmm.
to Mr. Morito, the Enterprise University, how long is the course? Because time is always a great, I don't want to say adversary for those of us in business. Making the time, it's always very challenging. So how long is the course?
Yeah, typically the courses are 90 minutes or so, or 60 minutes. But again, we do have many of the courses that are available that you can actually pull off the shelf instead of actually attending the virtual live course, and you can go through it on your time.
Okay. Are you going to share that address with us at
Yes,
the end
it's
of?
in the chat.
Yeah, it is there. I will share it again
Okay, thank you.
first.
So I'm sorry, one more question. We're talking about loan, and I'm talking to the lady from Comerica, Vanessa?
Yeah.
So for example, I need a loan about 5 million from you, and I give you my business plan or my balance sheet or something like that, or profit and loss statement. What is the first thing you're looking for? What would be a red flag when you look at it? I mean, what's the first thing you're looking for?
That's a good question, and it's hard to answer. I'll give you a few things. One is they're going to look at trends, right? So they're going to want to look, depending on how much you're asking for 5 million, for example, they're going to ask for 3 years of tax returns. So a trend is very important. They want to see, did you, like last year, let's say you had an amazing year, but the year before you had a loss. That's going to be something the bank's going to consider. So they want to make sure that you're trending up, that you have profitability year over year. So that's very important. If there is a loss, they want to, and this is where it goes again to relationship, because you want someone to advocate for you, right? They want an explanation for a loss. So if there was a loss, was this a one-off thing? Is it reasonable? Can we understand why this is not going to happen again? So if there's anything that looks that was a loss, is it a one-time thing, or is this an issue that this business we can foresee them continuing to have? Net income. Businesses sometimes write a lot of things off for tax purposes. That's where, again, having the good CPA, the good business attorney, and the good banker that all work together is important, because if you're trying to be lendable, then that's a conversation that needs to be had to make sure that your CPA is setting you up to be lendable. That's important, right? And of course, credit is important. Anyone that has over 20% ownership and usually does have to be a guarantor on business loans. So everyone, individual's credit, and then also a industry type and time in business is very important. So for example, just statistically speaking, most new restaurants will fail in the first year. That's just a statistic, right? So that's going to determine how long in business. So they're going to want to see you around so the bank can feel comfortable with this industry type. I hope that answered your question.
Yes, thank you.
Of course.
Do you mind if I add up to your question, Lara?
Yes.
Add up to Vanessa's recommendation.
Response? Yes.
The bottom line in this question that you have, specifically if you're asking for $5 million, that's quite a bit of sum of loan. Okay, you basically have to work on your cash flow. What the lender is really looking for is how good your cash flow is. And most lenders are looking for 1.25 debt service ratio. It's what you call EBITDA. It's earnings, before interest and taxes and amortization. And if you come up with that particular percentage, you would know that you are ready. And CPA can help you with that. And that's how it's basically just really getting ready before you go to this particular amount of loan that you think you can. But if you think you can, and you've been profitable in the last 3 years, and your net income are all profit, then you can try.
So is that the major metric?
Well, that's the major thing that the lender are looking for, how strong your cash flow is in the last 3 years. That's what they basically ask for you from the beginning. And if you don't meet it, then they will just tell you you can try other lenders.
If I may add to Reddy's points there, Madam Lara.
Yes,
so
sir.
in any business financing request, any lender is going to look at two things: primary source of repayment and secondary source of repayment. The primary source of repayment, as Reddy was referring to and Vanessa was referring to, is the cash flow from the operations, right? So as Reddy mentioned, typically it's a 1.25 to 1 coverage, which means that if for every dollar of debt, there's $1.25 of net income, right? Being able to show or report it. And the secondary source of repayment comes from either assets or collateral support. What is there outside of the cash flow or the revenue being generated from the business that, should something be delayed or there's some challenges or obstacles that are faced, that there is capacity and ability to be able to satisfy that obligation? So primary source of repayment and secondary source of repayment is what any lender is going to look at on a given request.
Thank you. Can I ask, just for clarification, when you're talking about the secondary source of repayment, and I know one of the slides talked about the receivable, something about the receivables. So if you have a lot of receivable, that the money that people owe you, I'm not explaining that to you guys, know what that means. Will that be one of the justification for that, or something that is looked at?
So yeah, if you have receivables, so assets, which are typically your secondary source of repayment, could be combinations of equipment in the business, depreciable value of that equipment, that is. Receivables, if you end up extending terms, right? If you sell a product and you offer terms and you have receivables, that's obviously an asset of the company. Or also assets of the individual principal or principals, which are typically guarantors also of the credit facility, as you heard from Jennifer's presentation earlier. So that's also considered a secondary source of repayment. But if it's solely receivables, then depending on what the need, again, as I said earlier, what the need and use is of that credit request or credit facility, and you have, say, very large receivables, perhaps, and if it's a short-term type of need because you're waiting for those receivables to come in order to you to obviously continue to operate or pay for the overhead expenses that are ongoing, regardless of whether that money comes in or not, then that's where the receivables perhaps can be a form of collateral for what some lenders will refer to as an asset-based line of credit. Based on the receivables, you provide a report to that lender every month, and that allows you to advance up to a certain percentage of those receivables to continue to operate the business. As those receivables come in, it gets paid down.
I guess
Thank
if I may add, is this, I think every lender, we look at your company on a holistic basis. We not only just look at your personal credit score, the company's payment history, the company's performance cash flow, historical and projected, and also collaterals, and then also your characters, and then your own capital investments. So I think those are the high levels. We all as a lender look at it as a holistics. It's not like we can carve out pieces. I have lots of ARs, please fund me, you know, but if you are really have lots of drawbacks on other situations, we might not able to fund you. So everything, every lender, I believe all the bankers and CDFIs like us, we look at the company on a holistic base, and then, but those are the items that maybe you have one item you score higher, but another item score lower, you might balance it out. But if you know some of them, if you score is pretty negative and some is really strong, you might not even get the loan. So I highly recommend that, you know, just like what John said, right? We need to have ABC partners, you know, attorneys, and then we forget of them for now. For maybe we want to focus on bankers and also CPAs. So because of those, at least the BNC will give the holistic pictures of your entities that will make lenders, no matter a bank or CDFI Lux, feel comfortable, understand your situations. And so this will be a good partner. I know that we're running out a little bit short on time, but yeah. I appreciate everybody still here. I want to just point out another really critical examples here. This is real life experience. I'm quite sure the bankers will agree on me. So because like before you just jump in, I would think when we talk to CPAs, attorneys or bankers, just like you look for your physicians, you know, for your doctors, you want to do your own due diligence. Because there is maybe one doctor, he will go and say, oh, you have so much issues. He will prescribe every prescriptions he want to give it to you, right? Some of them will say, yeah, no big deal. Your arm's still there. Even though like last time my arm, I couldn't lift up my arm. Say, yeah, so go away. And you exercise a little bit, you'll be fine, right? And you want to know which one works for you and which one you need to make your judgment call, which one works the best for you. And about CPA, at the end of the day, they prepare the financials for you. You give them the invoice and all the records. They prepare financial for you. But at the end of the day, you are the one who will have to care to be responsible for your tax and for your payments. You cannot say, oh, my CPA does that for you, not for me. I don't know. This is what he prepared for me. When IRS come to audit, when they say you owe tax, it's your responsibility because the CPA that have no liability on that. The reason I really want to put this in is that I was reading a case like actually Wednesday. A borrower come to us. He makes the revenue is $1.2 million. Net profit, $470,000 in the fashion industry. And then it's a C corporations. And then he owed IRS $99,000 in tax with that based on that tax return, right? So he come to borrow, oh, like what John and Vanessa just said, right? The cash flow looks pretty good, right? He makes $471,000. So, but are those the tax returns make sense? And I asked the owner, if you make that much money last year, only 2 months ago, right? Why do you need to borrow $350,000? Where the money go? He said, I don't have that much money. I'm like, but your financial shows you make that much money. Right? So he said, I don't know what my CPA does. I just give the numbers to my CPA. But the story is that we want to make sure that you are the one, even though the CPA filed for you, business owner, we are the one who is responsible. I told her, you realize you owe $99,000 to IRS if this tax returns filed. He's like, oh. So again, the example is that we'll go back to John's. I think we need to have a good ABC partners, not just have ABC partners, but good ABC partners, trustworthy, understand your situations, and will advocate for your benefit, not just for the benefit for you to apply for a loan, right? I'm quite sure that tax return looks good for to apply for a loan, but is that the best practice to advocate for you as a business holistic point of view? So I couldn't emphasize enough that using that experience, that example to say net business owners to have a good CPA, good banking partners to have all your financials ready, the real good financials ready. So that's sorry, I'm rambling too much because we share the passion. You know, we see so much of those things. We don't want business owners to step into the wrong track, you know, in the beginning.
Okay, I think, we are almost like 50 minutes over the time. So it is like, we shouldn't keep, our audience like here longer. So I want to appreciate everyone, our audience, our like panelists, everyone who, dedicated their time today and presented the information, and those businesses who participated here. Thank you so much. We hope there will be more opportunities to be there to, to work with all the panelists again and have these sessions more. Thank you again, City of Glendale. Thank you, Hurik, for like helping us to put this together. It is really, we appreciate this opportunity, and I hope like the businesses who were here today, they are benefiting from these sessions. And I shared the information in the chat list. Please feel free to contact any of us if you have any question. And like at Pace, our services is all free of charge. So just you can drop a like email to us, and we will be happy to help you, to guide you through your way to get like start your business or expand your business. Thank you so much, everyone. It was a pleasure to be here, and have a great rest of the day. Hurik, I am passing this to you if you are there.
Thank you. Yes, no, echoing what Vartui said, thank you all for making yourselves available. It's been a very I'm trying to find the right adjective. Informative webinar. I learned a lot. I'm not a business owner, but you have all the resources there. You discussed everything in detail. And I'm looking forward to reconnecting with you all and hopefully having more webinars on these topics, because we all can prosper from it. And Vartui, as always, Pace has been wonderful to me, to us, to our organization. So I'm hoping to collaborate more with Pace in the future. And if anyone has any questions, feel free to email me. I will make this video available. It'll be on our YouTube channel. It'll be on our chooseglendaleca.com website. And just before I leave, someone mentioned something about the tech industry. So City of Glendale works closely with we're known to be a hub for tech industry. And we have what's called Glendale Tech Week. And we have what Jennifer had, I guess, called crowdfunding. So we have a lot of events, that take place during Glendale Tech Week that help startups, that help tech companies. So if you want more information, please feel free to contact me. Happy to connect you with all that resource that we have, or resources. With that said, maybe we can have a webinar on crowdfunding. It's a great topic. And if you have any interest, please let me know. We can set up a webinar to cover those interests as well. So thank you again.
Thank you. Thank you, Rick.
And have a wonderful day, everyone.
Thank you.
Thank you.
Bye.
Bye-bye. Bye-bye, everyone. Bye.